Have you ever caught yourself wondering if XRP has simply taken too long? Maybe you've been holding for years, watching new crypto projects explode while XRP seems to spend most of its time moving sideways. If you've ever asked yourself, did I make the wrong decision? You're definitely not alone. In fact, after looking through hundreds of comments from XRP holders recently, one question kept appearing over and over again. People weren't asking whether XRP's technology works. They weren't debating Ripple's partnerships or the XRP ledger. Instead, they were asking something much more personal. How much longer are we supposed to wait? Some investors have been holding since 2017. Others joined after the SEC lawsuit, believing regulatory clarity would finally unlock XRP's potential. Yet here we are. And many people are beginning to wonder whether they've been too patient or whether the market is simply moving on without XRP. The truth is, this isn't just an XRP problem, it's a psychological challenge that every long-term investor eventually faces. The longer an investment takes to reward your patience, the harder it becomes to stay confident. Every day you open social media, you see someone talking about the next meme coin, the next AI token, or the next project that's supposedly going to deliver life-changing returns overnight. Meanwhile, XRP holders continue hearing the same criticism. It's been years. If it hasn't happened by now, maybe it's never going to happen. But here's where it's worth separating emotion from reality. Price and progress are not always the same thing. Financial markets have a habit of rewarding hype immediately while rewarding infrastructure much later. That's especially true when an asset is trying to become part of the global financial system instead of simply attracting retail speculation. Building financial infrastructure isn't like launching a new app or creating another meme token. Banks, payment providers, regulators, and financial institutions don't move at internet speed. They move carefully, often taking years before adopting new technology because billions or even trillions of dollars depend on getting it right. That doesn't automatically mean XRP will succeed, and it certainly doesn't guarantee future price appreciation. But it does explain why many investors expected a timeline that may never have been realistic in the first place. Many people assumed that once Ripple announced another partnership or once another legal milestone was achieved, the price would immediately reflect those developments. Markets rarely work that way. Adoption often happens quietly before prices respond in a meaningful way. Another important point that many investors overlook is that expectations can change much faster than fundamentals. During every market cycle, excitement builds far ahead of reality. Then, when progress takes longer than expected, disappointment sets in just as quickly. The technology may still be advancing, institutions may still be testing solutions, and regulations may still be improving, but investor patience begins running out long before those developments are fully reflected in price. So maybe the better question isn't whether XRP has taken too long. Maybe the better question is whether most investors underestimated how long financial transformation actually takes. Because if your expectations were built around months, instead of years, disappointment becomes almost inevitable. And that's where the conversation becomes much more interesting. If waiting alone doesn't determine whether an investment succeeds or fails, then what actually does? One of the biggest mistakes investors make is assuming that every major announcement should immediately change the price. Ripple announces another partnership, a country introduces new digital asset regulations, or another financial institution experiments with blockchain technology, and many people expect XRP to double overnight. When that doesn't happen, frustration grows. But history shows that markets don't always reward progress when it happens. Sometimes they reward it years later. Think about other transformative technologies. The internet existed long before companies built trillion-dollar businesses on top of it. Smartphones were introduced years before they completely changed the way people lived and worked. Artificial intelligence didn't suddenly appear last year. It spent decades developing before becoming a mainstream conversation. Infrastructure often comes first. Widespread adoption comes later. This is one reason the XRP discussion has become so emotional. Some investors believe every delay proves the project has failed. Others believe every new announcement guarantees an explosive price move. The reality is probably somewhere in the middle. Progress and price don't always move together, especially in markets influenced by speculation, liquidity, regulation, and broader economic conditions. Another factor that deserves attention is the difference between retail expectations and institutional decision-making. Individual investors can buy or sell an asset in seconds. Large financial institutions don't operate that way. Before introducing new payment systems or digital asset solutions, they typically spend years evaluating compliance requirements, operational risks, legal frameworks, and technical reliability. Even after successful testing, deployment often happens gradually, rather than all at once. That's why many analysts argue that regulatory clarity matters. Not because it magically increases an asset's value overnight, but because it can reduce uncertainty for organizations that manage enormous amounts of capital. Even then, regulation alone doesn't guarantee adoption. Institutions still need a clear business reason to use a particular technology, and markets will ultimately judge whether that value exists. It's also important to recognize the psychological trap created by comparing XRP to faster-moving assets. During every crypto cycle, there are projects that produce extraordinary gains in a very short period of time. Those stories dominate headlines because they're exciting. What people rarely discuss are the countless projects that experience explosive rallies only to disappear a few years later. Short-term performance doesn't always reflect long-term durability. That doesn't mean patience always pays off. Holding an investment for years without regularly reassessing your reasons can be just as risky as chasing every new trend. Healthy investing requires asking difficult questions. Has the original thesis changed? Is the technology still developing? Are institutions still showing interest? Are regulations becoming clearer or more uncertain? Those questions matter far more than whether the price moved this month. Perhaps the most overlooked lesson is that time itself isn't proof of success or failure. Some investments need years before their value becomes widely recognized. Others never achieve the expectations investors placed upon them. The challenge is learning to separate evidence from emotion instead of allowing frustration to become your investment strategy. So, if waiting alone doesn't tell us whether XRP's future is bright or disappointing, what should investors actually watch over the next few years? Which developments matter, and which headlines simply create noise? So, has XRP taken too long? The honest answer depends on what you're comparing it to. If you're comparing it to speculative meme coins that can gain hundreds of % in a matter of weeks, then yes, XRP has been a much slower journey. But if you're comparing it to the pace at which global financial infrastructure evolves, the timeline starts to look very different. The financial system wasn't built overnight, and it won't be modernized overnight either. Banks, payment providers, regulators, and governments typically move cautiously because the systems they manage support global commerce. Every major change requires testing, compliance, security reviews, and coordination across multiple organizations. Whether XRP ultimately becomes a larger part of that ecosystem remains uncertain, but expecting a transformation of that scale to happen in just a few years may have been unrealistic from the beginning. At the same time, it's important to stay objective. Long-term conviction should never become blind conviction. Investors should continue paying attention to measurable developments rather than social media excitement. Are more financial institutions exploring blockchain-based settlement? Is the regulatory environment becoming clearer? Is the XRP ledger continuing to evolve? Are businesses building real-world applications that solve actual problems? These are the kinds of questions that deserve attention because they focus on evidence instead of emotion. It's also worth remembering that markets rarely reward patience in a straight line. There are periods when almost everyone feels like they missed the opportunity elsewhere. Then sentiment shifts, narratives change, and assets that were ignored suddenly attract renewed attention. No one can predict exactly when or if that will happen for XRP, and anyone claiming certainty should be viewed with caution. Investing always involves uncertainty, regardless of how strong a project's fundamentals may appear. One lesson that experienced investors often share is this: don't let the market decide your conviction for you. If your confidence rises only when the price rises and disappears whenever the price falls, then your decisions are being driven by emotion rather than research. On the other hand, if new evidence contradicts your original investment thesis, it's reasonable to reassess your position. Staying flexible is not weakness. It's part of responsible investing. Perhaps the biggest takeaway from today's discussion is that waiting by itself doesn't tell us whether an investment is good or bad. Time is only one piece of the puzzle. What matters far more is whether the reasons you invested still exist today. If the original thesis has strengthened through continued development, broader adoption, and improving regulatory clarity, then the passage of time may simply reflect the slow pace of institutional change. If those foundations weaken, then reevaluating your expectations becomes equally important. Instead of asking, has XRP taken too long, maybe the better question is this: has the reason I invested changed? That question encourages rational thinking instead of emotional reactions, and it can help investors make better decisions, regardless of what happens next in the market. As always, Remember that this video is for educational purposes only and shouldn't be considered financial advice. Every investment carries risk, and it's important to do your own research before making financial decisions. If you found this discussion helpful, let me know your perspective in the comments. Do you think XRP has taken too long, or do you believe the market is simply underestimating how long financial transformation really takes? I'd love to hear your thoughts. And if you enjoy thoughtful, evidence-based discussions about XRP and the future of digital assets, don't forget to like the video, subscribe to the channel, and turn on notifications so you don't miss the next one.